You know that feeling, right? You're staring at a chart, you've absolutely nailed the analysis, you know exactly where the price is headed, and then somehow you still end up losing money on the trade. It is one of the most frustrating things in trading, and it's the huge gap that separates people who can analyze from people who can actually profit.
So in this explainer, we're going to bridge that gap. We'll start by talking about the core problem, then build a blueprint for success, nail the entry, manage the trade like a pro, and finally, wrap it all up by mastering the entire process. Just think of it like this. We're going to go from being the architect who just draws up the plans to being the builder who actually brings the skyscraper to life.
All right, so let's dive right into the core problem, what I call the execution gap. This is that massive chasm between knowing what should happen in the market and actually making it happen with your own money on the line.
This quote right here, it just hits home for so many of us. I'm sure you can look back at a chart from yesterday and mark up the perfect entry, the ideal stop loss, after the fact. But doing it in real time with real pressure, well, that's a completely different ballgame.
And here's why. The single biggest reason good analysis just falls apart is a flawed mindset. When fear or greed or impatience gets in the driver's seat, that perfect technical setup you found, it just becomes another donation you're making to the smarter, more disciplined players in the market.
So how do we fix it? Well, we start by building a blueprint. And here's the key insight. The real work in trading, the part that actually makes you money, happens before you ever click that buy or sell button. Preparation is everything.
This is the mantra you've got to burn into your brain. Find, wait, enter, win. It sounds simple, right? But the hardest part by far is step 2, the waiting. This is where impatience and FOMO just creep in and destroy everything. But patience is the ultimate trading virtue. You have to let the setup come to you.
Having a plan before the trade is live is absolutely non-negotiable. You have to answer every single one of these questions beforehand. This checklist, this is your weapon against emotion. It's what stops that dreaded analysis paralysis when the pressure's on. You stop thinking and you start executing the plan.
Okay, now let's talk about how all this prep work leads to executing the actual entry. This is where that patience and precision really pay off.
I really can't stress this enough. Never, ever chase a trade. If you miss your entry, you move on. That's it. Chasing a move after it's already left your station is just a low-probability, high-stress gamble. It's a total recipe for disaster. Remember, the market gives us endless opportunities. Your only job is to wait for the A+ ones.
So how do we actually get in? Well, it kind of depends on the time frame. For those really high conviction, high time frame, or HTF setups that you've been stalking for days, a limit order is perfect. You can set it and forget it. But for faster plays, scalps on lower or mid time frames, a market order makes more sense. That means you've got to be at the screen, watching for confirmation, and then pulling the trigger yourself.
This PYTH chart is a perfect picture of what I'm talking about. The amateur trader, they chase that initial big red candle down. The pro, though, waits. They see the price close below that key level, and then they patiently wait for the retest. That entry, right on the pullback, that's the high probability, low risk trade. That is what professional execution looks like. Okay, you did it. You're in the trade. Now what? Well, the game completely changes. Your job as an analyst is officially over. Your new job is risk manager, and your only tools are pure discipline and that plan you already made. Once that trade is live, you can really go down 2 different paths. Winners stick to the plan, period. They treat a stop loss like a business expense, not a personal failure, and they're ready to get back in if the setup is still good. Losers, on the other hand, they just freeze up. They start hoping, they move their stop loss, breaking their own rules, and they let one small loss completely derail their entire strategy.
And this FTT trade is a perfect real-world example of that winner's mindset. Look, the first entry got stopped out. A loser gives up right here and complains. But the professional's plan accounted for this. It included a plan B, a re-entry at a key level just below. That planned re-entry was executed without emotion, and it turned a small, expected loss into a massive win.
Now, here's another really critical detail for managing your trade. Look closely at this SOL chart. You see those long wicks that dip below the key level? Amateurs see that and they panic sell. But pros are looking at the candle bodies. Notice how no candle body actually closes below the level? This tells you the level is holding. Those wicks are just liquidity grabs designed to shake out weak hands.
And all this leads to a more advanced concept, strategic sacrifice.
You have to start seeing your small, planned losses not as failures, but as calculated business expenses. You're sacrificing a tiny amount of capital to protect the rest of it, making sure you have the firepower to be in the game for the next big opportunity. It's a strategic move, not an emotional reaction.
Okay, this brings us to the final and, honestly, the most important piece of the entire puzzle: mastering the process. This is how you go from getting it right every once in a while to being consistently profitable.
100. That's your first target. But listen, the goal is not to win 100 trades. The goal is to journal 100 trades. What you're doing is collecting 100 data points on your strategy, your psychology, your mistakes, and your strengths.
Journaling is the absolute non-negotiable tool for getting better. And you have to use real money, even if it's just tiny amounts, because you need to feel the emotions of fear and greed to learn how to manage them. It forces you to be accountable. It helps you find your unique edge. This is how you shift your focus from chasing P&L to mastering the craft of trading.
And don't just take my word for it. This quote from another trader really gets to the heart of it. Journaling creates accountability. If you can't write down a clear reason for why you're risking capital on a trade, you have absolutely no business being in that trade. It's that simple.
Look, this isn't a get-rich-quick thing. It's a career. Your first journal of 100 trades is going to be messy. By the second one, you'll be applying what you've learned. By the third one, after 300 data points, you can start expecting some real profitability. It's the natural result of a refined process, not luck.
Ultimately, it just comes down to this. You have to focus on getting better every single day. Master the process of preparation, execution, and review. The money? It's just a byproduct. It will always follow skill and discipline.
Let's end with this one thought. The market has zero memory and zero emotions. It does not care about your brilliant analysis or how certain you felt you were. It only rewards one thing: clean, disciplined execution. So the real question is, are you ready to stop being an analyst and start being an executor?